So we're now going to invite our next panel, who are going to discuss the future of payments. I'd like to introduce again Vassilios Mandouras, Deputy Governor, Monetary Policy and Financial Stability, who will chair the panel. And along with Cecilia, we're Debbie Byrne, Managing Director of An Post Retail, Daniel McLean, Deputy Head, Product Proposition Division, Digital Euro at the ECB, and Sam Hinton-Smith, Head of Public Policy, EMEA at Stripe. Thank you.
Thanks very much, Denise, and thank you to all of you for joining us, and welcome. And let's talk about the future of payments. We actually have the full team here. We've got the public money and private money, which is great. We've got an international perspective and a European perspective and a domestic perspective, so I'm hoping it's going to be a great discussion. So before we kick off, maybe just the kind of four points of context for me. So first, payments are absolutely critical to the functioning of an economy. Right, most people don't really think about, I mean, with the exception of people who are joining me here today, don't really think about the underlying infrastructure and what's happening to payments on a day-to-day basis, but it's absolutely critical for the whole economy. Second, and as Cecilia mentioned very well and set up our panel really well, there is a lot of innovation that is happening in the world of payments. Third, if you look at history, actually, I think a lot of the innovation starts in payments, but then it filters through to other financial sector activities as well. So this is also a kind of prelude of things to come in other types of financial intermediation. And then, of course, finally, this is an area where the public sector and the private sector have to work together, whether it's through innovation hubs or central banks upgrading their own payment systems, or, as we were talking about in the previous panel, the national payment strategy here in Ireland. So a lot to get through. We'll cover some questions between us, but then hopefully we're going to have some questions from the floor as well, also online, so we'll make some time for that too. And maybe, Cecilia, if that's okay, I'll start with you, picking up from where you left off a little bit on cross-border payments, because you mentioned that there's been more progress in terms of domestic payment systems, although again, I think that's a bit uneven. I think our experience is a little bit different. We might cover that. But it's been particularly hard on a cross-border basis. It's really relevant for us, not just because of the beer between a kind of German and Irish version, but also because we're a small open economy, particularly reliant on trade. So why is that the case? Why have there been more frictions in cross-border payments? And then how are you approaching it at the BAS Innovation Hub, which you started touching on?
Well, thank you. I'll be short because I've already said lots, so I'll give the floor to panelists. But it's not that odd if you think about it. The financial systems and the infrastructures as we know them in the industry was developed for a very different society. It was okay to have transactions 9 to 5. It didn't matter if it was 2 days delay, and it really catered for domestic needs. And who was really in the international space? Well, there was a few multinational companies and asset managers, and that was basically it. But that's not how we operate nowadays. We all through our phones and do things cross-border, and we want it to work. You know, if I can watch something from Netflix, why can I not make a financial transaction as easy and as instant? So I think what the crypto world has sort of taught the public sector very forcefully is that if we don't make sure that we are delivering infrastructures for the private sector to build upon, they will try to do it for us. And if you, like me, think that the central bank money should, continue to be the core, private sector will always know much better what people need. But if you think the central bank should still be at the core, you have to pay attention, and that's what we do. And just very briefly, two projects on what we try to do, not just talking, but actually building. So I spoke about instant payment systems, and they're fantastic, but they only operate on a domestic level. There are some connections, so a Thai can send instant payments to Singapore and back and forth, but if you want to scale that, you end up with a spaghetti soup. So Project Nexus is the answer to that. One-stop shop, you connect into one platform, and others that want to do the same, and then people can start to send money, instant, cross-border, cross-currency, in the instant payment space. So that takes care of the retail need. The other exciting thing is, but that's a bit more into the future, is Project Agora. That is taking advantage of the tokenization technology I talked about, composability, atomic settlements, difficult because it's new technology. You have to bring a lot of people into the table and agree on things. But if we pull it off, I think we can look forward into a very exciting future with infrastructures that can really fully cater for the digital society. So we're working on that as well.
Very good, and we might come back to some of these, but maybe I'll actually turn to Sam next, because I think it links nicely in terms of, I mean, from your vantage point, what are some of the key opportunities that you see in terms of innovation in payments in particular? And to make it real, what are the kind of frictions that you see and you're trying to tackle through that innovation?
Of course. Thank you, Vasilios, and thanks to the Central Bank for the opportunity to speak here today. As a financial institution supervised by the Central Bank, and as a company with deep Irish and European roots, we greatly appreciate the role of the CBI as a thought leader on financial services policy, not only domestically, but especially at European level and also globally. And I think the success of this conference over the past couple of years is a real manifestation of that thought leadership. So look, the most exciting vectors of innovation for us are where payments creates the opportunity for new forms of economic exchange. So I think there's a tendency to see payments as the end result of a process. So a consumer wants to buy something, and then they pay for it. I think in our experience, payments can be upstream of commerce. So innovation in payments can help to create new forms of economic exchange. And we've seen that in our own experience. So, for example, our product Connect enables payment flows in multi-sided marketplaces and platforms. We've also seen it in areas where new forms of payment innovation have created the opportunity for recurring revenue-based business models. And what that means at macro level is that, in fact, the delineation between what we might call a traditional business and an internet economy business is actually being eroded, and that's certainly not the way that we see the world. We see businesses as businesses. And so a barbershop that is using Forest, great Irish tech success story, to manage appointments and to get paid online, or a farmer using HerdWatch to manage their livestock using a mobile. Those are internet economy businesses. And we think that is particularly important for policymakers because it frames the way that policymakers can assist not just internet businesses, but businesses as a whole. I think the other really exciting thing for us is that we're seeing that innovation is beginning to unlock newer economic models in a new wave of innovation. So, one example would be in micro payments, which is an area that we're thinking about at the moment, which has the potential, for example, for a news outlet to develop a new economic model based on pay per article rather than the traditional monthly subscription model. So that's the good news. What about the frictions? Well, the governor spoke this morning about frictions in cross-border payments. We see many other examples, particularly fragmentation of infrastructure, fragmentation of regulation. So we often think about regulatory harmonization as being one of Europe's superpowers. But actually, as Carol was saying on the previous panel, we still have a long way to go in making harmonization a reality. We hear that from our users, we hear it from European startups, from European enterprises. We also know it as a financial services business as well. And so, yes, technology can help to overcome some of that fragmentation. So, helping businesses to traverse the complexities of sales taxes in different European jurisdictions, or helping businesses to offer different European payment methods, the payment methods that their consumers want to use. But there is also an absolutely critical role for the public sector, and that's why we are so excited to see the continuing steps towards harmonization in areas like payments. So with PSD3, PSR1 going through Brussels at the moment, and indeed also very interested in the work that public authorities, such as the European Central Bank, are doing on a digital euro.
Very good, thank you. I think a theme of the day is about the strengthening of the single market, actually. But maybe, Debbie, we'll come to you. I mean, An Post is really a key component of the domestic payments ecosystem. So how do you see the evolution of that ecosystem domestically and kind of going into the future?
Yeah, I suppose kind of echo a lot of what Sam and Cecilia would have said. Like, I think there's three big forces that are really driving rapid change in payments. I think on one hand, you've got big tech and fintech coming in, driving innovation. I think you've consumers now and businesses increasingly becoming more demanding, wanting a payment system that's more efficient, frictionless, and less costly. And then you've, regulation, whether it's SEPA Instant and PSD2. So I think the three of these are coming together really quite rapidly and really changing, I think. And I probably don't talk about payments, probably as a less traditional banker in the room, but more about how people manage their money. And people are looking for this smoother interoperability, whether you're a small business or a consumer. So I think the coming together of all of that is quite important. And An Post, I suppose we are a challenger brand. An Post Money is challenger. So when we came into this marketplace, we had to look at new and different ways of acquiring customers. We know that customers are a lot of inertia when it comes to changing your current account. So a lot of what we built out was digital functionality in our app that very much looked at helping people manage their money. So we're kind of the only provider in Ireland that has an open banking capability where people can link all of their accounts regardless of who you bank with. You don't have to bank with An Post for our Money Manager tool. You can link all your accounts, all your credit cards, and then see all in one place how you manage your money. And we're seeing now, when I look at Money Manager, about 60% of the people who have linked to that are non-customers of An Post. It can be 50-50, 60-40. So there's that need there to help people better manage their money all in one place. So I think that's quite interesting. And I think then when you see of all of the other innovations in terms of buy now, pay later, QR codes, embedded finance, I think is kind of a huge area, and that's that whole kind of intersection, I think, with fintechs and big tech. And then you've subscriptions, which really is about invisible payments. And that's what we hear when we talk to people. People are saying, like, I kind of don't know where things are going out. I have something attached to my credit card. I have something else on PayPal. I have something else that I've kind of put on my company credit card. So there's a real need there, I think, to help people manage their money and bring that all together. Cash is a big part of our business. We're the largest mover of cash in the business across a network of 900 post offices, which I tell you is a big challenge to manage. And while cash is in decline, like BPFI data showed that 25% of in-store purchases so far this year are still in cash. So people still choose to operate in cash. And, it's not always that older demographic. I had an experience here myself 2 weeks ago at a rugby match, went to pay for a round of drinks and my phone went dead. Just as I went to pay, I had cash, but it was a cashless stadium. So mobile wallets and contactless, yes, is all increasing. But we're seeing as well increasingly younger kids going out and having 20 or 30 euro kind of at the back of their phone case for exactly that reason. So I think there'll always be a need for cash, and the access to cash legislation here I think is important. So and then you've the most vulnerable in society who I think like to budget in cash. Like in years gone by, the head of the household would have had the rent money in an envelope and had different money portioned off to help budget. And there is a cohort in society who still like to budget and have hard cash. And we have a product called Household Budget, whereby you can opt to have your local authority rent deducted at source. So you'll come in and collect your social welfare, your old age pension, and we'll have that deducted already. So again, it's a way of helping people budget and manage their money. So we really sit at that intersection where we really feel cash is important, but also in terms of our own financial services products, obviously investing in that digital infrastructure is key as well.
Thanks, and maybe if I could just follow up on it, I think it's so interesting that you have to, you have to balance this traditional services, including cash, which is so critical for a large number of people, but also with this push towards digital transformation. So how are you approaching this, and what are some of the trade-offs?
Yeah, like there's a big cost to us for funding the network. I think I think partnerships, like another big theme for me, I probably should have mentioned at the beginning, we partner very successfully with AIB and Bank of Ireland. AIB and Bank of Ireland customers can come into the 900 branches 6 days a week, might I add, 9 to 5:30. And customers of the banks can basically lodge and withdraw cash and checks. So I think there's a big role for partnerships. Like we see probably, I think without that partnership with Bank of Ireland and AIB, a lot of our branches probably wouldn't be viable. So I think there's a role for partnerships, and I think that's really important. And then, the whole investment in the digital infrastructure, regulation, AML, etc. We also manage the state savings kind of business, so the big investment there for us in terms of investing in AML infrastructure. So it's that challenge all the time of running a business that generates enough cash to be able to, and we are a business while we're a commercial semi-state, we still have to run it and generate cash to invest back in. So my background is all private sector, so this has been one of my most interesting and challenging roles, I have to say, in terms of balancing both. And I've kind of said it in interviews before, like we really only need probably 550 post offices, so it's that challenge all the time of maintaining the viability of 900, which are not viable, and then you generate the new business models, I think, to cross-fund that as well. So it's the loaves and the fishes.
Thanks, Debbie. And maybe from physical cash to the digital euro. So Daniel, so we've actually, the digital euro has already been referenced, I think, 3 or 4 times already today. And of course, it's one of the key innovations in the payments landscape. So could you tell us a little bit more about, maybe the rationale, but also what it would bring to the European payments landscape that we don't already have?
Yeah, absolutely. I think the digital euro is about why. It's actually the first question I get asked when I talk about the digital euro. It's, but why, Daniel? So there's 3 whys. There's the why for society in general, there's why for consumer and merchants, and there's why then for the aspects of financial inclusion to that extent. So why for society in general? Well, it's about the future of our currency. It's about the next step of what we want to do digitally with cash. Do we facilitate a public option when it comes to digital means of payment? And we think, yes, we should facilitate it. And there is plenty of space in the market for a digital currency and also all the private means of payment. So we think that in the future, where cash is declining, but it's going nowhere. I live in Germany, and if we were to ever get rid of cash, I think some of the Germans may actually be outside the ECB with pitchforks. So I don't think cash is going anywhere, but it is decreasing, and it's decreasing substantially in numerous European countries. And what do you do when it decreases? Well, you can move everything to private means of payment, but we also think it's good to have a public option. That option should always be provided. And we call that the monetary anchor. It's difficult to kind of explain, but it's basically in the future, when cash is decreasing, there is a tangible representation of the currency digitally. So €1 is always €1 is always €1, be that physical, be that digital. So that's the reason why society in general. So what's the benefits for consumer and merchants, especially in the consumer space? Because I think we've done a poor job in communication here. We have not communicated to our consumers what the benefits the digital euro would bring. And these are not short-term benefits. This is not to resolve a current major issue in payments in the euro area. It's to make sure the future is actually facilitated. And what do I mean by that? I mean that when a consumer goes to any country in the euro area, they can always pay digitally. there's no issue with payment. Now, currently, we rely on non-European providers for that. Now, that's fine, it's good, but there also should be a European way to pay there. So when you walk to a merchant in Spain, in France, in Germany, there is no issue to pay with cash or to pay digitally. Currently, today, there's a slight issue. Some merchants will not accept digital means of payments. Some merchants will not accept international card schemes. They accept domestic card schemes in those particular jurisdictions. In Ireland, we rely on international card schemes, which is great, but we are fully reliant on those schemes. So it's good to have a public option, a public means of payment. And that's where I also want to bring in the financial inclusion approach. And financial inclusion actually is not really much of a problem in the euro area. In the euro area, if you look at the stats, it's about 98% banked or 96% banked. So, job done. Actually, no, it's not about financial inclusion, it's about digital financial inclusion and digital literacy. And we've been told by our consumer organizations very clearly, our LD associations very clearly, that there is 20 to 30% of people that would struggle to make a payment online, that would struggle with going into a bank and asking them for assistance when it comes to digital payments. We have to address that divide, and the digital euro can do that. Actually, in the legislation that's going through Parliament and Council at the moment, there is what's classified as the public approach, where member states would designate a body that would facilitate digital financial inclusion. And I see, Debbie, you are here because the post office network in Ireland could be an ideal vector for that. It's known for people, not to oversell our post office network, but of course, that's the kind of things we should be thinking about. So that's what it's in for consumers. And finally, what about consumers and merchants? Sorry, merchants. What about merchants and businesses? Well, that's all about acceptance and cost. We want to have a cheap means of payment electronically for merchants. So if you are a pan-European merchant, you want to expand into the euro area, you are not worried about payment acceptance and how much that's going to cost you. So we want to go in at a level that will facilitate easy payment acceptance across the main use cases when it comes to merchants. So you're going in, you can tap your phone, the payment is instant, there's instant settlements, it's simple for merchants, it's clear for merchants, the pricing is clear, and the dynamics is clear. And then finally, I think I missed the point. I meant to actually bring the banks in. Sorry, the banks have always asked us what's in it for the banks, and the banks wouldn't be the biggest cheerleaders of the project, if we're very, very honest about it. They have lots of concerns about the digital euro. They see it as another regulatory project that they have to invest into. But what's in it for the banks is that it facilitates their future in payments as well. We want the banks, payment service providers, to be the vectors of distribution for the digital euro. It brings them back in the game. They've lost the game a bit. It brings them back in the game. They can facilitate digital euro accounts, and we will facilitate a compensation model where they get a small part of the transaction to allow them to distribution. And in the end, this will be free for consumers. All basic use cases, like cash, will be free. So to summarize, it is the digital euro of cash. It's a digital aspect of cash for the future. So I think. And we have a bit of work to do to facilitate the narrative there and to facilitate the communication, especially on the consumer side.
Thanks very much, Daniel. Before we move on, I actually wonder if either Sam or Debbie have any reactions to this, because as you said, Daniel, it is also about the broader financial services providers. You don't have to, but I was just curious.
I mean, look, I think one of my reflections on the digital euro, and I was fortunate enough to serve on the ECB's advisory group on the digital version of the currency, is that what matters just as much, I think, is the functionality. I think it ties into your point, Daniel, about digital financial inclusion. So it's a case not only of solving the problems of today, but unlocking that functionality for the future. And that's why I think, when the ECB is considering, for example, conditional payments, and when the ECB is looking at the potential for things like multiple wallets, those questions really matter, because ultimately a new way to pay, whether that's a new local payment method or whether that's a central bank digital currency, will ultimately succeed or otherwise on the basis of meeting that user need and being used by consumers and merchants.
Thanks, Sam. Maybe, and then one more question just to broaden it even further or look further ahead. And then we might open it up to see if there are any questions on the floor, but if not, we've got plenty to cover. But maybe, Cecilia, for you, the BIS has spoken quite a bit about the Finternet, is how it's being described as a concept for the future of the financial system. Could you tell us a little bit about this, and then ultimately what this means for consumers and businesses? And you were talking about tokenization earlier as well. So
absolutely. Yeah, the Finternet. It's a vision that has been formulated by the current general manager Augustin Carstens in a collaboration. Again, private sector and public sector working together on sort of looking into the future. Nandan Nilekani, who is a entrepreneur, a very successful business leader in India, very much involved in the digitization of Indian payments. And they put together a paper, and it's a vision, and it's a strong vision. It's basically that in the same way as internet came and how we can all kind of get on that. I think Al Gore called it the information highway 30 years ago, and now it's sort of something that we can't really envision our lives without. But the internet is just a strong thing that we can get on it, and we can pick up information and transact and inform ourselves and interact with other people. And the idea behind the Finternet is that you should be able to cover your financial needs in the same fashion. So anyone at any place should be able to transact whatever he or she wants to transact with anybody else somewhere in another part of the world. And if you think about, ooh, can we do that today? No, not at all. So it's I think about it as not anything that is possible anytime soon, but it's good to have it as a sort of at the horizon. And what does it need? Well, sound economic and financial architecture. The role of the banks and the role of the central banks would not change. It would need, obviously, application of very advanced technologies that is still very much tested, and it needs regulatory and governance structure. So think about it as something on the horizon that, when you get lost in all the details, what do we actually want to achieve? We want to achieve maximum functionality for people. But it's a long way there, so let's just keep it there on the horizon and aim in that direction. That's how I think about it.
Great. Can I just check if there's any questions from the floor? Because please. There's one here and one there.
Step away from the microphone. Thanks very much. An excellent panel. My name is Josh Hogan. I'm from an Irish law firm called McCann Fitzgerald. There's lots of progress happening, and we're seeing SEPA Instant, lots of functionality developing. It's interesting, though, to note, I don't think any of you are placing any emphasis on the new MiCA regulation that came in, and the asset reference tokens, the electronic money tokens, functionality there. Do you see any role really going forward for those within the payments architecture?
Thanks very much. We might take, I think there was one there. Sorry?
If I can,
of course. Of course, yeah. Oh, these are meant to be interactive sessions. So.
It's a bit related to the previous question. Thank you, Lano. I was in the previous panel. We will have 5 different regimes for payments in Europe. And one of the reasons we are creating the CBDC is to have the competition with Visa and MasterCard, which is another regime. So I'm a bit confused with 5 different regimes, which is the banking regime, the e-money regime, the PSD2 at the moment, the MiCA regime, and then the CBDC regime. And what is the impact?
Very good. This is a good questions. Sam, I actually wonder if you might want to kick off. And actually there was, and if you're okay, kind of to talk about it, but Stripe also recently had a transaction of a stablecoin platform. I think it links a little bit to one of the kind of first questions. Interested on a little bit on the kind of rationale, business case. Again, what are the gaps that you're seeing there at the moment? And I think it relates to a little bit kind of both of the questions here.
Yeah, of course, no, very, very happy to. So Stripe has agreed to acquire a business called Bridge, which is a fintech innovator that uses stablecoin-enabled API infrastructure to move money. And the context for that is that we have long been interested in the potential of tokenization and in the potential of blockchain technology. And ultimately, what we're looking to do here is to solve user need. And I think there has been a shift in the past couple of years in a few directions. Firstly, there is the appetite from business, and particularly from long-standing enterprises, to utilize tokenization for payments and for money movement. And you've also seen that on the banking side, indeed, with the establishment of initiatives like the Regulated Liabilities Network, so looking at the tokenization of deposits and how that could be leveraged as a tool. I think the second one for us is obviously public authorities exploring digital currencies, so on both the wholesale and also the retail side, for a number of reasons. And I think Cecilia set those out on one of her slides a few moments ago. I think the other really important contextual change is around regulation. So we've had MiCA here in the European Union. A number of other jurisdictions either have created regulatory frameworks for stablecoins, for tokenization, for blockchain technology. We're seeing a number of other jurisdictions looking at the potential there. And ultimately for us, I think there are two tests. Does it meet user need? Is there user demand to utilize new technology? And secondly, it comes back to this point about functionality. What current and future problems can be solved by utilizing and deploying new technology in payments?
Thank you. Anyone else wanted to react to this? No?
No, just to pick up on the point that Sam said, like I do, and Cecilia referenced it earlier as well, I think it's just, there are new business and commercial models kind of evolving now, looking really at the friction points for businesses and consumers. And I think we're going to see, and we are seeing it, just a dramatic change, just in terms of, like, if we talk about financial inclusion and you look at people in the gig economy, like there's a lot of innovation there, which I think is really interesting. People don't want to wait to get paid till the end of the month or the end of the week. They want to get paid at the end of a shift, the instant payments into an account, functionality there that allows them to calculate their taxes and put that money aside, embedding microloans into that based on the analysis of the pattern of their earnings, and then the integration as well of wealth management tools like pensions, etc. So there's a lot of innovation out there that I think is bringing together some of these technologies, but also at the intersection of unmet needs. And I think, how we look at helping people manage their money and those business models, I think are there, and I think industry partnering with some of fintechs or some of the newer companies coming together, I think can kind of create some exciting opportunities in helping businesses and consumers. So I think it's exciting.
Very good. We are rapidly running out of time, but maybe I could just finish off with one last question, maybe for you, Cecilia, and this balance, right, between, especially for central banks and regulators, between the need for guardrails and regulatory oversight, but also fostering innovation, especially in the payment space, given what we were just talking about. So how is that balance? What's your assessment of that at the moment? And then also, how does initiatives like the BIS Innovation Hub can help with that?
Well, it's not easy, and I'm not in the regulatory space. So if it sounds like I'm giving instructions to the regulatory world, that's a misunderstanding. I stick within my lane, but just to show you what we've learned, and we keep learning in the Innovation Hub. Is really to collaborate on the experiments. So we run a big network of central banks, people and people working within the regulatory and supervisory field, and we do tech sprints with them. We explore what can be done going forward. We help them, and there's a lot of sandboxes coming around. I think there is the same sort of model being used here, to basically to test innovative technologies in a safe space. I think just having a couple of people in a separated IT structure, so you don't blow up the RTGS system or anything worse, is very helpful, because it creates knowledge and it creates insight, and it's very energizing, but it's done in a safe way. I know there are those who are looking into special licenses for new business models. Is also a way forward. I'm not familiar with that, but steady as we go. We have a pretty good system. We should not, we should neither take it for granted, but we should not feel a lot of rush. But move slowly, because but deliberately, because people deserve the best we can come up with, really, when it comes to access to good financial services. So, yeah, a couple of exciting years ahead.
Very good. Thanks very much to all of you. A round of applause for our panel, which is brilliant. Really appreciate your time.